You have questions, we have answers. This is Jane Miller.
And this is Ken Muller. Welcome to our show, all about real estate with Ken and Jane. Today, Jane, we're going to cover issues that arise in real estate transactions. Nobody likes surprises, but even in real estate, it's a very systematic approach. You know, you have a lot of things to cover, and there's emotions, so it can be a roller coaster.
Yeah.
So we're going to cover some of the common things, and that can arise.
During the transaction,
right?
Yeah, but Ken, I mean, roller coaster itself, right? I feel, I could be wrong here, I feel sometimes it's individual, including myself, created. Okay? Some people said news, good news and bad news. The news itself doesn't contain good or bad.
Right.
Depends which perspective you're looking at.
Right. I think, like you said, always it's sometimes when there's a problem, it's 51% is how you're gonna handle it.
That's right.
So
exactly.
50,
And today, I think the focus is to explain or outline some potential issues we have experienced, right? So the people are aware. So a lot of time, right, there's a solution. So you are 100% right, Ken. When things happened, emotion took over. So if you can stand from the third person point of view, right? Remove yourself. I know it's hard. I know I'm much more emotion than you. Yeah. But if you could do that, you will feel you'll be much calm.
Right. So the first issue we want to tackle, which is a very, very common issue, is that no home is perfect. And when you have a home inspection, obviously we've covered this many times, home inspection is something that any buyer buying your home is going to do. And the home inspection report, the job of the home inspector is to document everything, the small things and the big things that are wrong with the house or that could be done to improve it overall. So there's issues that will arise. I mean, like you said, no home is perfect. You're going to have issues. You could have issues with the roof, an old HVAC system. There could be environmental concerns. Maybe you have some mold issue. Maybe you have a radon elevation if you have the basement. So these are all things. These are not pleasant surprises, but these are all things that sellers will have to be prepared to deal with, right?
Yeah.
And I think.
You are right, Ken. On the other hand, right, when the COVID just started, market went crazily high in a very short period of time. Right. So at that time, there's a few things happening. Number one, the home sold so fast. Okay. Secondly, if the buyer stood the ground to fighting for home inspection, if seller canceled the buyer, next contract will be much more than the contract we had.
Right. So it was.
So even I mean, in that time, right? If the agent said, "Well, Jane, you have this the problem, right? You have a roof problem, you have whatever the big problem, right?" And next buyer, you have to deal with it. Window doesn't open, for example. They have a glass issue, right? They broken seals. As I always say, well, I understand that. But if next contract, $20,000 more than yours, even they have a brand new window, it's still $10,000 left over, right, for the seller. So that at that time, home inspection issue was not that obvious. It's not because they don't have a problem.
It's just because it wasn't a balanced market. It was a seller's.
Because the buyer gave up their rights to negotiate.
Because it was strictly a seller's market with such limited inventory that the sellers had all the rights. But we're talking now about more of a level playing field when the buyers and sellers are in a more balanced position. And normally, COVID was the abnormal time.
Yes.
Now we're kind of back to a little bit more normal times where the buyers, if there are genuine issues, major issues, and again, you get to the whole issue becomes what's major, what's minor. That's why with contracts, sometimes it's good. You never want to just word it like for example, if you represent the seller, you don't want to say the seller will address major issues because what's major to you and what's minor to you are totally, you have to quantify.
Ken, you have a very solid legal background. You look at things from legal point. But for me, from the business point of view, think about it, Ken. Nowadays, the buyer is no longer like 20 offers lying outside your door waiting for you to choose from, right? Say if you have a limited offers and if you start to negotiate that before we get into contract phase, sometimes may not be good because well back about a year ago, I know the window could be issue because they have an old window. Old window sometimes doesn't open fully. Sometimes they have a broken seal. In that case, there was a broken,
right.
and that's an old window, so may not have a part. So I discussed with the owner, so we came up a game plan. I said, I don't want later on in a home inspection because if your window can't open 100%, it's a safety issue, potentially, right? That's a fail in that scope. And if the broken seal can fall into structural issue, okay? So we said window strictly as it is. You know how many contracts we have to go through? Because the buyer, as they accepted as soon as going to the contract and they changed tune. So a lot of time, right? And then the deal fell through during the attorney review. So a lot of time, right? It's because that particular house, I know for sure there's a problem based on my experience. And also it's a big problem because there's a big house, right? If a few window, you have to change to the new window, right? The rest house not going to match. And that was a perfect house, $1 million house.
Right.
So in that case, we have to do that. But if you say if it's only maybe one or two window, maybe we let it go to attorney review, let it go to finish review, home inspection, and negotiate later on, right? So
I think
it's very hard for the seller to get everything, like you said, legally.
No, it's impossible because everything is subject to interpretation.
Yes,
you could say the
that's
windows
right.
as is, and they could say, the buyer could say, well, visually, I could see there were broken seals in 3 of the 20 windows. However, I wasn't able to verify that certain windows could not open and close. So that's where the interpretation comes in. They say the buyer thinks as is, okay, from what's visually apparent. But when you get into the home inspection, they find out it's more than just those 3 broken window seals. There's actually 10 windows that don't open and close. So that's something you can't quantify. Another good example is with the roof. A lot of times you can visually say the roof is old, it's going to be in disrepair, and they say, well, we're selling the roof as is, or they negotiate the price accordingly. However, you don't know the condition of the underlying plywood or the rafters that support the roof, and that's an issue where I think you've had it firsthand.
Yes, I had a problem.
Where there was an agreement or supposed agreement that the roof was off the plate because the price was the sales price was adjusted accordingly. However, when they got into it and they got into the depth of the home inspection, the inspector said the plywood is rotten and it looks like these rafters are have issues, so they get more into it. So then the buyer said, hey, hang on. It's not just the roof. It's actually a structural issue. So we want X amount of dollars credit or we want you to fix it.
Yeah, so, and then we get our independent contractor out there because the seller, once again, from our perspective, is not fair. But our contractor confirmed what the buyer said is correct.
So hang on. So there's always interpretation. There's always subject to negotiation. It's never it's never just black and white.
No, never.
Right? So those are
Agree
are
with you 100%.
Right.
Yes.
So So you can try your best in the contract to quantify the scope of the home inspection and document it, but there's always things where depending which hat you're wearing, the seller could say, well, I said the windows are as is, but unless you expressly say that, it's as is as to what with the windows, when things, in fairness, if the buyer finds out that half the windows don't open and they can't see that without physically testing them, then, it's a...
In that case, we made a very short strict like it is. It doesn't matter what. So that's why there's 2 contracts fell through during the attorney review because when the lawyer... People like you get on the contract, said exactly what you said to the buyer. You look at a window, how about if it's like 10, 20, there's so many windows there, right? It's a big house. So, and then your cost could be up to $30,000. Is that you sign up for?
Right.
The buyer said no. So that's what happened.
It all goes back to the expectation versus the agreement, whether you're dealing with employer-employees or with a contract with a buyer and a seller. What's the expectation, right?
Yes.
That's all part
and what do we agree?
And so that's why you should try to make the expectation in writing be reflected in the agreement. So there's no misunderstandings. You try to quantify everything that makes
verbal never work.
No.
What you said, what I said, sometimes I feel in our business, right, 2 agents had a disagreement. And you said, I said, and the read, sometimes they like, agent like to communicate via text.
Yeah.
So it's very brief.
Yeah.
Sometimes maybe it's just worth a few more words to explain what you said, right?
And I think everything in life, this goes beyond the scope of real estate contracts. Everything in life, it should be in writing. Anything
Clear.
that's agreed, and then put it as part of the contract. The more specifics you can be on the contract, the better and the smoother the whole transaction
because
will
everybody know what we,
that-
have the same foundation, right? Like you lay out there, like you said, right? We have agreement.
Right.
Sometimes the expectation is okay, but if I don't know your expectation, you think I should know, but I don't know. So that's create a big problem, with a home inspection, with anything in life, right?
Right.
You think I should know, you think I should do. I don't think so. So, a lot of time, as you said, just spelled out.
Right. Yeah. So let's move on to another issue that, again, wasn't common during COVID, but is now surfacing again, and that's the appraisal contingency.
Yes.
Normally that applies if you're having a loan. Normally the house has to appraise for what the lender's appraised value is. Otherwise, there's options to renegotiate the price. But
I want to add one thing, Ken. Right, the appraisal. Please don't mix the appraisal with the contingency and the appraisal itself. Why I say that, right? Recently, I had a colleague, a dear friend. Her client chose a lender, right? A smaller lender in New York. So they put an offer, they 50% down, okay? The appraisal came back, it's like $75,000 lower. For a townhouse, if you $1 million house, $75,000.
All right, so let's say the townhouse was maybe $600,000. It came back at $525,000.
$525,000, and the buyer is very upset. But the thing is, right? You would say the buyer can go back to the seller, renegotiate the what you call them, the
purchase price.
But the seller disagree because you still get a get a loan.
So
you're
that's
50% down.
So that's where the details have to be ironed out in the actual contract of sale. That basically, if it underappraises, it's irrelevant. It underappraised, but it's irrelevant to the bank's perspective. They're still fine loaning the person the $300,000.
No problem learning.
Or whatever, if it's 50% of the $600,000, because their stake is well secured, even though it underappraised from $600,000 to $525,000. The loan is they have their collateral, sufficient collateral, but the buyer is upset naturally that, hey, I'm paying, in their mind, they think they're overpaying $75,000 in our example.
Yes.
So then that's a very interesting, that's something where they can get the loan. That's a very good example because they can get the loan. They don't need they don't need the they don't need it to fully appraise, but then that's an issue. That's like a area where there really has to be spelled out in the contract that the attorneys draft what happens in that scenario.
But the thing is, Ken, just think about it. If they did say, right, but on the other hand, the seller still can decline because you can get your mortgage.
Correct. So that's why the contract has to say what happens in that case. That because it's right. The mortgage is still issued unless there's a specific language that if it underappraises, the buyer reserves the right to renegotiate the purchase price, which is
but the seller disagree.
Right.
Yeah, you can't say today's competitive market landscape, right? You can't make a seller agree. I would agree if you didn't praise, I'm going to reduce the contract price.
Right, no
seller will agree. First of all, how do I know the appraisal? The appraiser is fair.
Yeah.
In this case, because I know this because my colleague brought to my attention, it's in East Brunswick, it's my backyard. They asked my professional opinion. I said, absolutely not.
Right.
I said, I can't see that. I think that house may not worth $600.
I think there's some
but $575 should be right.
And there's some subjectivity to appraisals in the comps they use and how they base their data, and then that can fluctuate based on the actual comps they're picking out.
Yes.
So, all right, we're going to go to break. We'll be right back after these messages. Okay, welcome back to our show. So, Jane, let's continue talking about issues that arise in real estate transactions. We spoke about the appraisal contingency and how that could be subject to interpretation, and it has to be specified in the contract as to what happens if it underappraises, right? So when we drilled that. Let's talk about other things. If you're dealing, they say cash is king when you're a buyer. And there are multiple reasons why cash is king, because if you're dealing with a buyer that has financing involved, there are added complications, like we covered the appraisal contingency, and the issues that can arise from that. But also, oftentimes, other things could pop up with the buyers with credit issues, employment, loss of job risk, taking loans. So there's risk. So you risk, even taking out additional loans, because if you're going for a loan, you have to have a certain debt to equity ratio. And if the buyer, unbeknownst to them, if they do anything in the period from when they get the pre-approval until the closing, that could jeopardize the whole loan. If they take out a car loan, if they do something that maybe they default on a medical bill, and
they don't have to. If I had one thing, right? They get approved, and then we won't close until the end of August. So what a couple did, they went crazily shopping on their credit card for all the curtain, the furniture, what they want to do, and the backyard furniture inside improvement. At the end, the proportion is over the limit. Mm-hmm. So they had to, at the end, pay down the credit card in order to clear to close.
Yeah, that's happened. Or they take out a car loan. They figure, we've got the mortgage already approved, but then they take out a car loan for $500 a month, and that $500 additional dollars per month throws them off on their whole debt to equity ratio.
We had one, the buyer, nephew just got a new job and need a car but not qualified. The aunt called the aunt. The aunt showed up the dealer and co-signed it. And then here we can't close because of that. Yeah. They have to pay off the car.
So these are real life things, and normally the lenders should coach their buyer clients not to do lists. And the agents, if you're working for the buyer agent, you want to always remind. It doesn't hurt to tell them 3 different people, advise them what not to do, than to have it, so to remind them, because it's quite important. There's also the situation where I think you have to be a very sharp list agent. You have the situation where the buyer submits a pre-approval through Bank A, and then you find out, 30 days later that you call up the loan officer for follow-up, and the loan officer for Bank A says, they're not with me. I think they went shopping. That often happens because buyers want to shop around to get the lowest interest rate. So
we don't care who they go with, but we just want a new pre-approval.
Right. So you, as a sharp list agent, you want to be on top of that.
Yeah, we always do.
Right. That's something
we found out quicker than the buyer agent.
Right.
Because we call for update. Yes.
Right. That's something. So these are all challenges, or if unfortunately, deals can go south if at the end of the day, 2 weeks before, or the buyer, has a job. The job doesn't go through, or gets
suddenly the whole department got laid off. Go. So we had one that was really heartbreaking. Yeah. I represent the seller. They want to buy. They renting. And then their owner want to move back, so they have to rent. So they went out to look for the rental. They realized if they buy, the payment almost similar because rent went up so much. So they saw my listing. They're so happy. They're very happy. They signed everything. We're in there, and then turns out the whole department got eliminated. Mm-hmm. So the problem was with that couple even worse, because not only they lost the contract we sold to other people, no problem, but they can't even to get a rental property because they no longer have income. Yeah. So that was really heartbroken for them.
Yeah. And that goes to the whole point when if you're the list agent, you try to screen. Screening at least is helpful, but it's not there's nothing the be all end all. The whole department gets gone, But that's why a lot of times when you're doing interviewing or going over with the seller different buyers with loans, you look at the down payment amount, you look at the bank, you look at you try to find out are the buyers 1099s or are they W-2s? How long have they been employed? What's has the lender done their credit scores? Because you don't want you try to eliminate any unnecessary surprises.
Well, when we have a multiple offers, right? I always ask a buyer agent, ask buyer to give authorization to their loan officer to release the information, because the loan officer would not tell you anything unless get approval from the client, the buyer. So always make sure if you are a buyer, make sure you tell your loan officer if you have nothing to hide. Tell them to, to be prepared. Any responsible good listing agent most likely will call your lender to confirm, because to be honest with you, Ken, once I was shocked. I called up, I can't name the name, right? And ask. They didn't do anything. They just asked the buyer how much your income. They did run the credit, that's true. How much you make, blah, 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 and give pre-approval. I said, did you get a pay stub? Did you do these? No, they haven't got a house yet.
I thought the lending laws changed now.
That's a big bank too.
But,
so that's why I always check. I said, I know you can't disclose personal information, but can you explain your general process?
Right.
Did you get all the information? Did you get a pay stub? Did you get, what you need to do, right? But sometimes you'll be surprised. It's not. I think it's not only the company policy. Sometimes depends on individual loan officer, maybe. So
that is
so
interesting.
I always check. Yeah, always. No harm to check. If the lender said they can't tell me anything, I will make sure go back to the buyer agent, say, hey,
do we need to release
your offer?
Least?
Yeah, I already asked you once, but your offer is pending because we have to verify before owner can make informative decision.
And there's certain things for privacy they can't tell you.
We don't want to know.
But we don't want to know how much.
We don't want to know how much you make. We don't want to know. We just want to make sure the bank has everything they need from you.
So
they run your credit. They know your job. They know you have down payment.
Because you've had that situation before where this was a few years ago. I remember in particular where the bank never ran the credit, and then they ran the credit after almost well after the pre-approval was issued, and the credit score negatively impacted
we couldn't close because we already under contract.
Yeah,
so that's why
which is unheard of, I think, not to run the credit up front. That's like.
I represent a buyer in that case over 10 years ago, and the buyer want to use their own lender, I said okay, and they gave a pre-approval. I did reach out to the lender, but we're on the same side. He said, yeah, don't worry, everything's cool. You don't have to worry. I said, okay, no problem. So we're under contract just about 2 weeks before commitment. I said, hang on, where are we? 2 weeks before commitment, we better be hurry. We're going to breach out the contract.
Right.
So, and then we realized that they couldn't do the loan because the buyer credit actually wasn't there. I said, what?
Yeah.
You haven't run the credit?
Yeah.
So at the end, quickly, we'll have to get another lender and find a special program and help them. I only had 2 weeks. So thank God our partner lenders, pulled it through. But that was taught me a lesson.
That's
you
crazy.
can't just assume.
Now you assume. Now you
can't
ask
just
everything
assume.
up front. Yeah.
Yeah.
That's so important to get the best screening. It goes a long way to the smooth sailing for the closing.
Absolutely.
Let's talk a little bit about other contract misunderstandings. Oftentimes, I think one of the biggest problems the sellers have in a real estate contract is, let's talk about the closing date.
Yeah.
The closing date is some sellers are no matter, you have to always, as a list agent, you always have to reiterate to them that the closing date is a good faith estimated date. It's a target date.
Yes.
It can be a realistic date, but it's not set in stone.
Yes.
A lot of times the sellers look at it, they think the contract is rigid. The closing date says we're closing March 15th, 2026. Therefore, I'm going to do my move. I'm going to shut the utilities off.
No.
But no, that's the biggest mistake because closing dates tend to be an estimate of maybe they could fluctuate at least a week or so, unless it's the time of the essence date where there's damages if they don't close, and it's more significant. But otherwise, it's an estimated date, and that's something in the contract that that I don't think buyers or sellers are really understand, because they're probably, from the layperson's perspective, they think the contract, everything is set in stone. Yeah. But those are just targeted dates.
It happened to my seller. It doesn't matter how I explain to them, how the lawyer explained. And that time the market is going crazy up. We're talking about 2021, 2022. Market go crazy up. So the buyer missed it. The seller was happy because they think they could cancel to sell for more. I said, no. Yeah. The only thing they missed it, our lawyer have to send the time of essence on that day or day after. They have 10 days to get, and plus there wasn't a buyer. There was delay in the bank.
Yeah.
It's common,
Yeah.
But our client said, nope. That's the date.
And here's another thing. Let's talk about the good old deposit money. A lot of the sellers have the mindset that if the deal gets canceled, for whatever reason, they get to keep the deposit
No,
money. That's a
they
big,
don't.
big no, because there's many deals, there's many ways you can get out of a contract. If you have, for example, usually if the parties, again, it all depends on the specific language of the contract, but usually if the parties can't come to an agreement on home inspection repairs, the buyer
yes.
can cancel, get the deposit back. Certainly, if the buyer has a mortgage, any contract's going to have in the mortgage contingency, meaning it's a contingency, meaning if it doesn't happen, the
Yep.
deal is legally canceled. The
And
buyer is
so-
not in default, so the deposit money returns to the buyer.
Yes.
Those are two good examples. Or if the seller, if they don't, perform on other ways, then the buyer can get out
Cancel
of the contract.
too.
Right.
Yeah, the
so the
deposit
seller has this
return.
mindset that I get the deposit money no matter what. If they
You know,
don't-
Ken,
but-
it's funny, right? Sometimes I feel the seller just fighting who hold the deposit.
Right.
So I said
So
to them,
it
why
does-
we fight who hold the deposit? It doesn't matter.
It doesn't matter
it's
because
the
if there's-
buyer attorney, seller attorney, title company. At the end of the day, nobody can release it unless we have agreement here.
Right.
So it's not like, your lawyer hold it, you're
Yeah.
going to get it tomorrow.
Yeah, I know, but psychologically they feel better, I
feel
guess, because they don't
safer.
feel that if the
feel
buyer
safer.
attorney's holding it, they don't trust the buyer attorney. Maybe they feel just more comfortable, even though right, and legally it doesn't matter who holds it because
Yeah.
it's going to get returned if it's validly canceled, and if not, then it's going to be frozen, and then until it goes through the court process.
That's correct.
So yeah, those are things with the contract. Again, we can be as specific. The more specific you are, the better. Outlining the appraisal rights, the home inspection rights. You're seeing in contracts now, it's quite popular to say, from the buyer or the seller, when they negotiate, they might put a monetary limit and say that the buyer will absorb the first $5,000 or the first $10,000 of home inspection issues, and anything over that amount would trigger them the right to ask for repair.
Yeah,
But then
or
the question,
credit,
but
yeah.
then you've got to say, well, if it costs $12,000 in repairs, is it only and they have a $10,000 limit on what they can ask for? Does that trigger the full asking for the $12,000 or just the $2,000 that's over?
Once
so
again,
you got to be really,
very
really
careful. That's you said, Ken, that's a good point.
Because otherwise, I
always
can see
make
people
sure.
missing that and then
No,
saying,
I always make sure
Yeah.
after that, and also is not only in your example, 12,000,
'Cause
more
it-
than that.
Yeah.
I would say agreed repair. It's
Yeah.
not you give me 57 pages, everything.
Right.
It's when we all
That's a good-
agreed. After agreed, 12,000 to 10
Yeah.
we don't do, only 2,000 seller can negotiate. That means we agree with it.
so you'd have to say
We-
anything over the cap, and
yeah,
then you could,
before that cap, we don't even,
and then you
that's
could get
off
in,
the table.
and then you could get into the estimates and the seller
who
estimate,
gets
buyer estimates, and that could
yeah,
vary
yeah.
too. But it's all
That's my job.
yeah, but it's a lot. Yeah, so there's a lot to it. You have to really, a good agent has to be a good understanding of the real estate contract and know, you really have to be a lawyer, in some degree.
A lot of time you have to really, understand people feeling.
Yeah.
The rule is the rule, all
Yeah.
right? But at the end of the day, we're in the people business.
So we didn't get to cover everything else. There's also closing day surprises. The main thing with that is make sure if you're the seller, you have to keep the utilities on so the buyer at their final walkthrough don't close the utilities until you legally close title,
Yes.
then you can cancel them. So we didn't cover title, but we're going to have some title professionals on the next 2 weeks to get in depth on that. But
There's a lot of issue with
issues.
the title. You need at least
Yep.
two show, probably not enough.
And that's what we're going to do.
Lot.
All right, sounds good. We're out of time. Hope you enjoyed the show. We'll see you next week.
Thank you.